very good morning to you and welcome to the news update. We are reaching you live from our studios in the commercial city of Lagos. I'm Oyin Priye Krumale. Now, foreign direct investment into Nigeria fell sharply by 70.06% in the first quarter of 2025, dropping to $126.29 million from $421.88 million in the previous quarter. According to new update from the National Bureau of Statistics, the slump came despite a rise in total capital importation as the foreign investors poured money into short-term high-yield instruments such as government bonds and treasury bills while shunning long-term commitments in the real economy. By contrast, total capital inflows rose to $5.64 billion, up from $5.09 billion in the previous quarter and $3.38 billion a year earlier, with over 90% going into money market instruments. Economists said such speculative inflows can exit quickly and do little to boost industrial growth or job creation. The manufacturing sector saw capital inflows shrink 32.31% year-on-year to $129.92 million in the first quarter, reflecting persistent investor caution after multinationals exited Nigeria in 2023 to 2024 amid tough reforms. Now, Nigerian states spent 235.58 billion naira on external debt servicing in the first quarter of 2025, a 68.4% rise from 139.92 billion naira in the same period of 2024, driven largely by the naira depreciation. Now, federal deductions under the irrevocable standing payment order meant the repayments were taken directly from monthly Federation Account Allocation Committee allocations. January actually saw the highest monthly outflow at 40.09 billion naira, over 305% higher than a year earlier, before stabilizing at the 39.10 billion naira per month from April to June. Now, Lagos led the chart with 49.58 billion naira, followed by Rivers State 26.34 billion naira, Kaduna 24.47 billion naira, Ogun State 12.57 billion naira, and Edo State 10.18 billion naira, together accounting for over half of all repayments. Now, while Jigawa, Benue, and Yobe recorded the smallest repayments, each still saw year-on-year increase above 50%, underscoring the nationwide strain. Economists warned that rising debt service could crowd out spending on essential services unless states boost internally generated revenue. Analysts highly warned that they're highlighting the high debt-to-revenue ratios, especially in states with low FAAC allocations, threaten the fiscal stability. The calls have been intensified for states to diversify their economy and revenue sources, improve tax collection, and consider alternative long-term debt to structures to reduce reliance on costly foreign borrowings. Now, the Minister of Aviation and Aerospace Development, Festus Keyamo San, has announced the suspension of a planned strike by aviation unions, which was scheduled to commence today. In a statement by the minister through his official X account on Sunday, he said, quote, "We are happy to announce that after our intervention, the planned strike by the aviation unions due to commence tomorrow has been shelved. The unions comprising the National Union of Air Transportation Employees, Air Transport Services Senior Staff Association of Nigeria, Association of Nigerian Aviation Professionals, Amalgamated Union of Public Corporations, Civil Service Technical and Recreational Services Employees, issued a joint statement suspending the strike." End quote. Now, the Nigerian equities market closed the week of August 8, 2025 on a bullish run, gaining for the 11th consecutive week. The all-share index climbed by 4,491.86 points to 145,754.91, up from 3.18% from the prior week's 141,263.05. Market capitalization rose to 92.2 trillion naira from 89.37 trillion naira, edging closer to the 100 trillion naira milestone. The surge was driven mainly by a 41% jump in the Nigerian Exchange Insurance Index, with Mutual Benefits Assurance, ICO Insurance, and Royal Exchange among the top gainers. A trading volume spiked to 7.7 billion shares, reflecting heightened investor activity. Sector performance was mixed. Industrial goods gained 8.73% on a strong cement stocks. Consumer goods rose to 8.27%, while banking slipped to 0.75% on profit taking. Now, market breadth was positive, with 66 gainers against 41 losers. Notable losers include Living Trust Mortgage Bank, minus 24.13%, Academy Press, minus 18.18%, and Dangote Sugar, minus 10.05%. Analysts expect the bullish moment to continue in the short term, but caution that mild corrections may occur if selling pressure builds in large cap stocks. Now, Nigeria's crude oil export are set to grow in September and October as Indian refiners turn to non-Russia suppliers. India's two biggest state-run refiners have bought at least 22 million barrels for delivery within the 2 months, including 2 million barrels from Nigeria. The shift comes after United States pressure led India to cut back on Russian oil purchases, with additional cargoes coming from the United States, Brazil, Angola, Libya, and the UAE. These combined purchases represent about 6% of India's monthly crude processing. The changes is partly due to cheaper shipping costs for oil from the Atlantic region to Asia. For Nigeria, the new demand offers a chance to boost market share and potentially earn higher revenues as competition from Russia oil eases. Now, many thanks for watching. Do well to follow us on all our social media platforms. Coming up shortly is Souk Business Landscape. Do stay with us.